Good evening. I'm Will Dove, and these are the top stories for Tuesday, June 3rd. In tonight's news, the Canadian economy is doing better than expected, but for how long? The American housing market is showing signs of collapse. We provide an analysis on the risk to Canadian homeowners and buyers, and a major Australian COVID vaccine study is shut down with no explanation, given while all data is erased. Canada's economy showed stronger than expected growth in the first quarter, expanding by 2.2%, but troubling signs beneath the surface point to looming challenges as U.S.-imposed tariffs under President Donald Trump begin to take effect. The tariffs, particularly the 25% levies targeting the automotive, steel, and aluminum sectors, have shaken long-standing trade relations with the United States and strained the interconnected supply chains built over decades. In addition, Trump's recent announcement of increasing steel tariffs to 50% will hit Canadian steel manufacturers hard, although no date for the increase has yet been announced. Statistics Canada reported the quarterly growth was largely driven by an export surge, a response to American buyers rushing to purchase Canadian goods ahead of increased tariff costs. Exports, led by passenger vehicles and industrial machinery, rose by 1.6% in the first quarter, while imports also climbed. This boost in outbound shipments, however, is largely attributed to U.S. companies stockpiling before the tariffs were fully in place, rather than sustained demand. Meanwhile, reneging on his promise to stand up to Trump on tariffs, Mark Carney quietly dropped tariffs on imported U.S. goods for many Canadian sectors last month. The 6-month pause reduces the tariffs for Canadian importers to effectively zero, especially in the manufacturing, processing, and food and beverage packaging industries. Despite the headline growth, underlying weaknesses have become apparent. Household spending fell by 0.3% after rising in the previous quarter, signaling a frail domestic economy. Analysts such as Desjardins' Royce Mendez described the domestic demand as stagnant, pointing to a disappointing underlying growth rate even before factoring in the full impact of the tariffs. Andrew Hensich, a senior economist at TD Economics, echoed these concerns, stating that trade tensions and the uncertainty they heaped on the economy have started to show through on activity, with clear evidence of consumers pulling back on spending. The Canadian economy's dependence on trade with the United States is stark. About 75% of all exports are destined for the U.S. market. With Trump's administration having announced, then paused, several new levies on Canadian imports. The effect is already visible in the manufacturing sector, where tens of thousands of jobs were shed last month alone. Preliminary estimates suggest the economy will only expand slightly in April, marking a sluggish start to the second quarter. Combined with rising unemployment, analysts see domestic demand as having all but petered out. The Bank of Canada is now facing a difficult decision on interest rates. With the central bank having paused rate cuts at 2.75% in April, economists like Nathan Jansen of RBC Economics predict a close call at the next rate announcement, but suspect that the weakness in domestic demand and the fading impact of previous rate reductions may provide room for further rate cuts, offering a bit more breathing room for the economy. Prime Minister Mark Carney, newly elected at the end of April, campaigned on a promise to transform Canada's economy with a focus on internal trade and energy. He now faces immediate pressure as auto manufacturers have already announced temporary production cuts, underscoring the vulnerability of one of Canada's largest industrial sectors in the face of U.S. protectionism and flagging domestic demand.